Regulated world, that's what we live in. And if we want to achieve adoption of our beloved technology, we need to find ways to regulate what we do. And we do exchange our assets. And the question is, who is building and how is it built the future of exchanges in this regulated world? So in the next panel, which is called the Exchange Product Playbook 2.0, you're going to be here and unfold on this topic. The moderator for today, for this panel, is our one and only Emi Lorincz. She is still the president of the board at the Crypto Valley Association and with the second hat on, working for Talos. Please welcome on stage.
Thank you, Benedek. And so nice that you guys still have patience and curiosity for the next panel. This is going to be a super exciting one. I would love to ask my panelists to join me here on stage. And let's sit in order of the pictures. The future of crypto exchanges and building that, but they're also building it today, making sure that the exchanges are just improving all the time. Let's go with a quick intro. Thanks for introducing me, Benedek. Yeah, the president of the CVA as well as BD at Talos. And I would love to ask first the ladies, Audris and Denitza, to intro yourself and say a few words about the exchange you represent.
Thank you, Emi. Lovely to be back. And thank you for sticking around. I know we are between you and the alcohol and a very nice lake breeze, but we'll get through this. I'm Audris. I look after the institutional business at Bitvavo. We are a European-based global leading exchange. What I mean by that is we lead in terms of the largest Euro spot market share. Across the markets, more than 50% of that is from Bitvavo. We are based out in Amsterdam, and primarily we started servicing retail clients, but over the last 18 months or so, we have seen unprecedented growth in our institutional volume. We are regulated by the Dutch Central Bank and also very soon with the AFM as well from a MiCA exchange license point of view.
Cool. Hi, everyone. Thanks very much for sticking around. My name is Denitza. I work for Bullish Exchange, and I lead the business development effort in Europe there. Bullish is a regulated institutional exchange. What's pretty unique about it is that it's a combination between a centralized exchange and a decentralized exchange. So we have club and AMMs, all off-chain, which, as I mentioned, is pretty unique. I don't think anything like that exists anywhere else. So we launched it in 2021, and we are top 3 globally for Bitcoin spot volume. We also offer perpetuals and soon options as well. A curious fact that not everyone probably knows is that in 2023, Bullish acquired CoinDesk, and last year we acquired also Crypto Compare, also known as CC Data. So we have a comprehensive offering between exchanges, media, conferences, data, and indices as well.
Thanks so much.
Excited to be here for the 4th time in a row.
Yeah, and we have for the first time this panel, right? The exchanges panel with you.
4 times. We've done this panel together 4 times now, including once with FTX.
Yeah, I remember that. Yeah. Super. Thanks so much. Then, Konstantin, do you want to go ahead?
Yeah, sure. Thanks. It's super good to be back. My journey in digital assets started back in 2016, and back then all the hype was, the blockchain technology, and when at conferences like this, everybody was talking about the blockchain technology in a very abstract sense. So I think we've come a very long way, and yeah, this panel is very much testament to how far the industry has come. So that's exciting. For me, coming here is a little bit like a high school reunion. So it's very cool. You see the same people, and sometimes things don't change, but then there's also moments where there's rapid, drastic change. And for me, let me just share, a few key items. I think back in maybe 2020, when I was talking to a lot of institutions, banks, everybody was talking about doing something, but not a lot of folks were actually implementing anything. And now it's very different, right? We're in full execution mode. It's not just press releases, everybody's shipping, and it's a drastically different environment. So very, very exciting where we're going with this. In terms of Kraken, I think everybody in this room knows Kraken. We've been around for almost 15 years. We're the first exchange to launch Euro pairs, and yeah, definitely one of the leading exchanges in Europe. So I think for us, being back here is fantastic, and it's been a great partnership.
Thanks so much. Fred, please go ahead.
Hi everyone, my name is Frederic Volpe. Like many, I started in traditional finance in 2014, and late 2016, early 2017, I already started to look at crypto, starting with Ethereum, and I got really into it. So in 2021, I decided to join Binance. So now I had the institutional sales team for Binance in Europe. For the ones that don't know Binance, it was founded in 2017.
There's no one who doesn't know Binance.
Well, I don't know. But the company was founded in 2017, so a bit late compared to other exchanges, but it rapidly grew to become the leading exchange. Today we have over 270 million users. We have more than 40% of market share, and we're really in that unique position with a very strong community. So we were able to gather a lot of feedback and try to keep stay ahead of the curve. That's a short summary.
Yeah, it's really cool that we have two OG exchanges here, Kraken and Binance, but then we have here the challengers as well, or those who have a different edge and have been building super decent and reputable exchanges. The first question is, or the second is pretty much about the evolving needs of institutions. You are all serving institutions. What you have seen? Maybe let's do a quick from left to right. You want to start, Konstantin?
Yeah, in terms of evolving needs, I think it's very helpful to think about segments and sub-segments, because there's just so much is happening. So in my role, I basically cover in the institutional business in EMEA, and what we see is across different segments, there's different needs, but there's one common theme that I would say is infrastructure. So for, let's say, intermediaries such as banks, they want to provide crypto services, and they don't necessarily want to become a crypto exchange or a crypto company. So what they need is infrastructure and a trusted partner. Then with others, such as trading firms, they just rely on lots of exchanges, plug in directly, and they have let's say direct access. And for them, it's all about latency and, let's say, optimizing the last bit and the very last mile. Another huge trend that we see is in the asset allocator segment. So everything around Bitcoin treasury, or just in general treasury as such. So I think custody comes into play. Prime plays an important part, but the common theme really is infrastructure, and I think everybody in these segments knows what their end clients want, but they realize that it's good to then rely on trusted partners, where they just rely on people who've been around for a very long time, who have expertise, and where there's also an element of trust. Since FTX was mentioned, I think trust and counterparty risk are very big. And this time it's very, very different, right? A couple of years ago when FTX happened, I think counterparty risk was perceived in a very different way, and now the whole space has matured significantly, and the approach is much more professional. So that's the second theme that I see. It's just this convergence of TradFi and digital assets, which is actually fantastic to see.
Audris, you were nodding heavily.
To expand on Konstantin's point, I think you touched on a bit about infrastructure and also about the robustness and the convergence of TradFi alongside more crypto native sort of entities. I think there's also the theme here is like when we're speaking about institutions, it's about a service, and the service offering comes very different from the first wave of crypto, where we looked more towards perhaps, at the grassroots levels, retail, that was very product driven. Now, when you are delivering businesses from a service point of view and institutional level, the whole thesis becomes an operational clarity aspect. So it's a prerequisite. It's not just a nice to have. So I think that's where a lot of the shift is happening. And through the touch points that we mentioned about infrastructure or anything to do with your operational model, it brings about a lot of that robustness and the need for clarity in terms of the services that the exchanges or the businesses want to partner with. So, from risk management all the way to collateral management, better transparency. And there's more and more of that institutional drive, because if they can get that clarity, it means there's better chance that we have this ability to probably embrace the element of, a bit more of mass adoption, or at least scaled, sort of scale embracement of institutions coming into crypto. It's kind of saying, and it was sort of mentioned in a conference I was at last month in London around the future of broking as well, and around trading. It's just one aspect alone. But if we do not meet the risk managers and the regulators halfway from a TradFi perspective, I think that's where we're going to miss out a lot. So we see that convergence and also the meeting of minds as the way forward for institutional play. Yeah.
Super. Thanks so much for expanding on infrastructure as well as risk-related matters. Fred, what do you have to add?
Yeah, I think most of it has been said. I think the main topic is infrastructure, reliability. One of the main topics after FTX was reducing counterparty risk, so it's still the center of the discussion. There's many ways to do it. We have crypto custodian, we have banking triparty, which caters for the more institutional players, and that has been high in demand. And also to share a bit more, so I've been with Binance for 4 years, and it's, I really saw the change when I joined. We were mainly speaking to trading teams, prop traders, individual traders, and now it really changed to speaking to traditional hedge funds. So they're also looking at innovative tools to trade crypto, being more capital efficient. So we put a lot of effort into developing trading tools like portfolio margin, to have unified margin to trade across spot margin, futures, option, working on credit lines, while still maintaining high security on the exchange. So it's a balance where it's a fine balance to have, enabling more efficiency while still having a secure exchange to trade on. So yeah, to add on top of infrastructure, we've had to adapt for the new wave of traders and users on the exchange.
Wow, 4 years! It's incredible to see how the level of sophistication increased, right? Like, when it comes to infrastructure and such nuances as infrastructure, or not nuances, it's the sophistication factor, I want to say. Denitza, what else can you add to this?
Yeah, I think you guys covered it pretty well already. I would probably put them in 3 categories. It's innovation, efficient capital allocation, and regulation. In terms of innovation, clients, as you mentioned, always want better products. They want to see traditional they want to see centralized exchanges like us leveraging the best from the DeFi space of all the innovation that's coming in there, wrapped up in a regulatory manner and brought onto the centralized exchanges. Capital allocation, you named it, credit lines. No one really wants to park money on exchanges and have them sit there and generate nothing. So anything that's credit line related, cross-collateralization, cross-margin, it's just expected as a given. And regulation as well. I think Europe is pretty easy for us now because we just have to be regulated if we want to operate there. But the challenge for a lot of these clients is that there's usually, especially given that we're talking about 27 plus countries, often they're given very little notice on what they need to implement with respect to their regulators. So they expect exchanges to act as their strategic partners, suggest solutions that would help them, whether it's, due diligence requests or specific rollout of tools. We recently had a client who came to us and said, okay, this is a requirement for us. That this doesn't really exist in crypto. It's probably something we can leverage off traditional finance. Can you leverage your internal group resources and come up with a solution? So yeah, the requirements are ever growing.
Super. You touched on regulation, and my next question is relating to regulation. In Europe, we've seen a lot of regulation-related fragmentation, or all the players have to go through or potentially have to apply for a MiCA. How did this shape your strategy, Denitza and maybe Audris, if you want to?
I would actually call it regulatory arbitrage,
Yeah.
right? Some countries give licenses easier, and then some exchanges were able to get them there and then transition them into MiCA. I think it's really important to understand that you are not just given a license by the regulator; you are continuously monitored by that same regulator, and I think only time will tell whether that was a successful strategy or not. It also simplifies things because now everyone is just transitioning to MiCA. So it does give some clarity. But yeah, I mean, yeah, regulatory arbitrage is still something that we see.
Audris?
I will say from Bitvavo's point of view, we always, from the beginning, the point about what Denitza said about regulatory arbitrage, we kept it very simple. We played with straight bets. So obviously we are homegrown in the Netherlands, so we're very much in lockstep with our Dutch regulator. I don't put any spoilers, but you should hear some news very shortly about that. But I think the point is made that MiCA or these sort of frameworks bring about clarity and transparency, but it also gives that assurance. We talked a lot about, not just this session, but many of these other panels earlier today and yesterday around how do we bring forth that institutional wave or the adoption or coming in. How do we get crypto to meet them, or how do they meet us? This, I would say that the regulatory backdrop for Europe is one of actually a very good way for us to be in Europe for Europe, and for any external investors, wanting to are interested in Europe. It gives them that assurance that there's some framework and clarity which all the participants are working, in concert with. So I think that's actually a very positive thing. I mean, a recent poll by us where we sort of look across the this user base, right, for just people who are actively looking at investments, whether they hold crypto or not, that more than 50% of the respondents believe that digital assets or crypto is, in the next 3 years going to be a significant part of their strategy, of their investment holdings, whether it's an individual or from a business point of view. So that itself, it lends a lot of weight and pause to think about what different business models are going to be transformed through that mechanism. So I would say that regulatory fragmentation, it's always going to be there, but because we have the harmonized element from MiCA and also from the TradFi world around MiFID and all the related frameworks, I think we have a better shot at moving stuff. I understand there's a lot of frustration at the policy level from a commission's point of view, where you can have 10 banks and nothing will be ever agreed upon. But at least from a business point of view, we can go about doing our business because there is an idea or a blueprint where we have certain ideas and strategies that we can actually execute. And as what Konstantin said at the start, that's about executing now. And we are all executing. We're not just talking about it or drawing up more strategy plans and policies.
Yeah, you guys are definitely about execution, or as in all of you here, but it reminded me of the founder story of Bitvavo. I learned yesterday that 3 college kids created Bitvavo, and today it's an exchange of 400 people, right? Like it's a nice founding story. If you don't know it, definitely look it up. Fred, you represent the VIP and institutional part of Binance. Can you share a bit, like, who are the clients of VIP? What trends have you been seeing? Which markets are you expanding in? Like, give us some data relating to.
Sure. So again, when I started, it was mainly traders active on the platform. So that we were referring to the VIPs, the traders as VIPs. But over the years, we have we put out different programs to cater for different types of users. So you can be a trader by trading volume, by asset holding on the platform. If you're if you're an allocator, or you're just looking to to hold crypto on Binance, you can be a VIP if you subscribe a lot to our earned products. So there's different ways to become a VIP and access different levels of trading fees, etc. And institutions, we differentiate VIP and institution because you can be an institution while not being really active on the platform. But you have blue chip names that open an account that just won't have access to liquidity or monitor the market, what it is like to trade on Binance. So we also cater for this type of users. In terms of volume trend, I can share a bit during 2024. Obviously, it's been a very, very strong year for crypto in general, for Binance as well. We've seen over a 40+% increase in user base for 2024. So we reached 250 million, just over, 40% increase in 2024. We've seen a lot of active VIP users that almost doubled during the year. And we've seen also over 140+% increase in our earned products, our saving products, and that really shows that the long term, like people have a lot of interest in crypto. They're confident on leaving their assets on the platform, and so yeah, 2024 was really strong. And in terms of institutions, again, it's very different now. It's just a lot more institutional players. So we've been using a lot banking triparty. A lot of people want to trade with asset off exchange. So we've been working on different types of products to cater for different types of users.
I remember when we talked, you highlighted that you've seen a lot of increase in Latin America. So when it comes to geographies, then where do you see the most increase?
I think
most demand.
Crypto adoption is global, but depending on the jurisdiction, it has different needs. So you mentioned Latin America. I think there the needs is a lot more about remittances. Yeah. It's also a good hedge against inflation in some countries. But I wouldn't say they're active traders versus jurisdictions like Europe or Asia. So we've seen definitely global adoption, but there's different needs depending on the continents.
Thank you. Konstantin, you recently launched your crypto as a service, and your flagship client was a neobank in the Netherlands, Bank. Am I pronouncing it right? Bank.
Spot on.
Bank. Or Bank once only. Can you share a bit about this and yeah, which other products enjoy the interest of your clients?
Yeah, let's zoom out a little bit. I think in terms of, you have to be where your client's at and what they need, right? So we're talking about trading firms to begin with. I think that's certainly what we were seeing as well. And then over time, we realized there's also a lot of B2B business, there's a lot of B2B2C business. And yeah, we've been servicing fintechs and banks for a very long time, but never in a, let's say, focused way like we are today, where we basically enable fintechs to go to market with a crypto product in a couple of weeks. And Bank, the case study that you mentioned, is fantastic because while obviously they care about a trusted counterparty and security and all that and liquidity for sure, it's also about rapid deployment. And I think this is where we are really seeing a step change. It's not enough to talk about abstract products, to have a product roadmap that is drawn out. When you engage with a client and they have a real demand, they have a real product, real targets to hit, I think if you have a solution that scales, but that is also slightly flexible, you're in a very good position. So in terms of what we offer in concrete ways, basically a setup that allows anybody who has an app to offer crypto to their clients, and all of this in a couple of weeks. It's quite a flexible setup where you can rely on our expertise when it comes to licensing, also to custody. Obviously, the liquidity is a given. And everything around that really has to do with what the client needs. Since you were talking about, let's say, other products, I think it really depends on who you're talking to. And what's very useful is to think about the client universe in different segments, because everybody has very different needs. And you know this from the Talos perspective. We also launched Kraken Prime. This is mostly for asset allocators and anybody who cares about execution a lot. And yeah, the way we look at it is we always have a very direct dialogue together with the product teams. So I think this is also a real edge that we have at the moment, where Kraken is really shipping and we've really stepped up our game. But it's also, let's say, we're in a sweet spot of scalable products, but then at the same time, you can also talk to us directly. And the feedback has been very, very positive, overwhelming. And yeah, in terms of, let's say, adoption and what we see, I think the whole debate is also very different, right? It's not just, let's say, academic debate or, very abstract. Suddenly, the questions that you get is, how fast can we go to market? Will we make the next compliance meeting or the next board meeting? And that's really encouraging to see. Maybe one last final remark. We've been talking to many internal digital assets teams at retail banks for a very long time. And there's a lot of champions that want to do things, and they're ready, they have been ready for a long time. But now it's also other teams within these retail banks that come knocking, and they go then to these digital asset teams and say, well, I think it's time. So even internally, with these retail banks that maybe have longer sales cycles, the debate is really, really changing, and that's fantastic to see.
Super, because we talked a bit about trends and also products as in crypto as a service. I'm also curious to pick your brains that what do you guys think about? We recently seen Deribit being acquired by Coinbase, then Robinhood acquired Bitstamp. Like the market structure changes. Like, do you have anything to add to this or thoughts someone wants to?
I think some consolidation is much needed and long awaited, right? We definitely don't need to have, how many are they now? 540 exchanges out there? And every day you hear news of new ones coming in. If you look at the market, it actually hasn't grown that much. Okay, there's been speed bumps with FTX and, macro and political turmoils and whatnot, but I think some consolidation was just much needed.
I think also it's high time due, because it's people are starting to shift and think about actually what's my business. A lot of times, if you can't explain your business in 30 seconds, I always call it elevator pitch, then I think we've got a problem. Because if I know in the early days, a lot of things were shifting, but there's still things, people are still sticking their finger on the end, figure out a rule or a policy, but things are a lot more firmer in place, there's much more clarity, and there's enough at an aggregate level of people moving in the same direction. So the need for consolidation is very much highly due, partly because I think the market's overstuffed with just enough product. It's what differentiates you from another offerer comes very much at a macro level now around how resilient and how. It's not about too large, therefore you're not going to fail. It's about, even if you're large at scale, what does it mean to be continuing adding value to that counterparty, be it a trading firm or a very big institutional hallowed name, or an individual at a retail level, right? The consumer end is also crying out for that sort of calmness and simplicity. So I very much welcome it, and hopefully it means that maybe down to 20 max. Because
really?
Yeah,
okay.
I don't think the world is big, but it's also very small. Sorry to borrow anyone ex-HSBC, right? We think globally, but act locally, because that's exactly how each of us in our remit and our regions try to thrive in a global setting. But how do you stay relevant is because you are competing with the niche in the areas that you're good at. And it's okay to be one-stop shop, but then you better be very good at being a one-stop shop for every aspect of that business. Otherwise, it's a waste of capital deployment. Yeah.
Yeah, I think especially TradFi players are actually waiting for regulatory clarity, and I think a lot of people were ready to go, and I think you see the uptick with first M&A, but then also partnership agreements signed is definitely a healthy sign. And you hear behind closed doors that if it weren't for, let's say, regulatory ambiguity, then yeah, we'd have seen a lot more. So now that we're moving in the right direction, I think there's going to be a lot more consolidation.
I think it's also gone past MOUs and partnership agreements. It's literally M&As, right? You know, where the check is produced, because that's where the rubber meets the road, because that's how you deploy capital and let the business grow even further. Yeah.
I also think the Robinhood acquisition put Europe back on the map, right? It showed to the world how important it is as a region. They also acquired them because of their Asian licenses. And in Coinbase and Deribit's case, it was just the importance of market dominance. It's interesting now how the market structure is going to change on the option side. So yeah, Bullish is launching options later this year. So you know, the game's going to get even more interesting.
About innovation, when it comes to Bullish, what innovation, what product innovation are you guys doing? But it seems like options is the most recent.
Yeah, I mean, we started off thinking, okay, what is it that we can bring into TradFi from the DeFi space? And automated market makers were thought of as these really just deep deterministic liquidity. Now what we're seeing is that we have a new service called Liquidity as a Service. So we basically offer automated market making liquidity to token projects and stablecoins. So that's another way to innovate, right? It's still market making, but it's pure code, deterministic liquidity. So we're always looking for new ways to create new products to offer to our clients. And yeah, I think that's the most exciting thing about crypto, right? Everyone's trying to do that.
Yeah, plus the most exciting thing about crypto to me is also that you can create products which don't exist in TradFi with the help of DeFi, for instance. And yeah, is there anything you would like to add when it comes to innovation, Fred?
Yeah, I'm just come back on consolidation. I agree that now it's still a new field, so it's normal to have so many different venues to trade on, so many different projects. Consolidation is needed, but the whole concept of blockchain and crypto is not to have liquidity concentrated somewhere as well. So I think it's also important to keep that in mind. Where Deribit has probably 90% of options traders trade on Deribit. Is that good? Is that bad? I'm not sure. It's healthy at least. There's other concentration. When you look at Mike Saylor having so much Bitcoin, is it good? Is it bad? It really sounds like heavy concentration. So I agree. Consolidation is definitely needed to have the right options to trade on. But let's not forget the whole concept of blockchain and decentralization and not having a central point of liquidity.
By the way, can we just give Fred an applause that we on this panel and probably this entire day. I'm happy that on the panel Michael Saylor's name came up sooner than Trump's name, so thanks for that.
I could have.
But yeah, overall throughout the day, I can't recollect hearing the T word so much. So that's good.
What's the T word? Tesla.
Yeah, sure. That's Tesla. Nice. We have 5 more minutes, so maybe we can navigate into the closing question or. Yeah, the closing question. I think that's a good one, and that's relating to the future. So, how the future of or the exchanges of the future are going to look like in 3-5 years? Of course, we are in crypto. It's really hard to say, but what are your aspirations, or what do you think? Which direction are we going from left to right, Konstantin?
I mean, in a fast-evolving space like this, I think it's going to be very hard to predict the future, so I could be completely off. The one thing that I would say is, rather than making predictions about tech, I think it's definitely about, a lot of it is about trust. I think being a trusted resource is becoming more and more important. Understanding clients' needs, for sure, and then on top of that, something that we call being productively paranoid. So it's just this security ethos in everything that we do and how we see the world, and this then shapes your strategy. And I think in terms of what's happening, sure, there's so many themes, and I think for a lot of people it's hard to even keep up. But certain trends that we see, for example, crypto as a service, that suddenly this first nobody, and slowly, and then suddenly all the fintechs and retail banks are moving into the space. You see certain consolidation for trading firms as well. I think there's also just a lot of product innovation happening. And I think if you then were to apply this to all client segments, you see at the end of the day, it's just tech innovation. And for me, the biggest trend is the convergence of TradFi with crypto. So yeah, maybe to just sum it up and say it in one word, I think all the players that have been around for such a long time, sure, there's good reasons for that, but then at the same time, now the playing field is also very different in a sense that suddenly have new teams deploying very fast, and there's so much change happening, which is fantastic. So it's going to be very hard for us to predict the future, but I think in these terms, I think trust and making sure you meet the clients where they are is the most important thing.
Thank you. Audris?
Expanding on the trust point, so I think in order to build a marketplace where people want to come and trade on your platform, that it's all about the compliant, reliable and trustworthy, venue or a central place where people want to meet, and that can range from individuals, retail, all the way up to very large-scale institutions. So on that point and note, on top of the consolidation, which is bound to happen in any business space because of M&A, I think there'll be sitting alongside what we would have considered traditional business models that run, the idea of exchange that we normally know of a centralized exchange. You will have newer type of firms, fintech-ish style, the likes of the Revoluts of the world, running alongside and running at scale as well, with building or servicing a exchange or marketplace that allows for the exchange of digital assets. And if I can be bold enough to say, like from a front end point of view of trading, I think we see that actually the process of crypto digitization is a process rather than seeing it as another asset class on top of your cash equities, derivatives, FX. And, it's like becomes part of the ecosystem where, because of this tokenization that's going to happen throughout all the threads, it becomes part of a process, it becomes procedural, it becomes operational, rather than it being also seen as a new asset class. But then at the back end, so the back engine room is equally important when you're talking about exchange business or intersectional transactions. I say that's where stables will have a lot of focus, because that's the facilitator of the transfer of collateral and credit from an institutional point of view. So they may not get that pretty, glamour of the day, but they also have their use case in that backdrop. So tokenization, some far better acceleration use of some concept of the stable.
Super, thank you. Fred?
Conscious of time, I'll make it quick. But yeah, and in terms of infrastructure in the future, a lot of the conversation is whether centralized infrastructure or decentralized infrastructure would prevail. At the end of the day, I don't think it's it's a zero-sum game, and they're really here to coexist in the future. It's about giving optionality to the users. And so as a centralized exchange, Binance, we want to adapt to that and giving that option for users to access crypto in an easy, compliant, secure way, and being the gateway to access DeFi or other decentralized infrastructure. So I think it's here to coexist, and I'm sure that's the way it's going to go forward.
Cheers to that. I really hope you're right. Denitza?
I'm going to be super quick. I agree with you. I actually think simplification as well. We need to make the UIs more accessible, because we're talking to the young generation, right? I don't know if any of you here have kids, but they all have ADD. It needs to be like quick and simple so they can engage. Otherwise, they just move on to the next cool thing. So I'd say in 3 words: consolidation, regulation, innovation.
Yeah, so cool. Thanks so much. I got the memo that Pascal is here for the closing conversation or closing presentation. So thanks for the input. Thanks for making the last question quick. And yeah, so nice. Thank you. Please give a big round of applause to Denitza, Fred, Audris, and Konstantin. Thank you, guys.